Today is Monday, April the 6th, and in addition to what we normally look at, we're going to take a look at the top five banks, because Jamie Morgan this morning said that it would really take an awful lot for them to not produce their dividend. So that was sending a pretty clear signal to the market that JP Morgan is optimistic that they will have the capital going forward, and that lifted all the banks. So let's take a look at the banks. But advancers led decliners roughly 9-1. Remember that earnings start next week with Bank of America on the 15th, Wells Fargo on the 14th, Citigroup on the 15th. So the banks are coming up. And it is until the following week where we see some of the technology stocks, and the week after that when we're going to see Apple at the end of the month. But the McClellan oscillator took a bounce up, so it's pretty ziggy-zaggy, and I think there's more zigging and zagging to go. Let's take a look at, here's the McClellan oscillator against the Dow Jones here. You can see that it zigged back up. Look what it did back here in what is this, 2018, this period when the market dropped down and then it recovered. Its recovery, it spent a lot of time over the 200 area, and that's where what we would want to see here if we were looking for a signal of recovery. We want to see a lot of it happening above 200, not on either side of 100. So we're not there yet. If we look back on 2007, that's 2018. Let's look back at 2007. You can see where the market had its lowest point right here. That's the famous March the 9th. And when we started recovering, we had a lot of zigging and zagging. But again, we had a lot of them over, well over 200 in the 260 and 300 area, a lot of them. So we want to see zigging and zagging on the other side of the 250 line, not on the other side of the 100 line. If we look at the volume, big up volume today, but let's look at some candles and just see if today is a little irregular. The S&P was up 7%. Look at this big candle today. Forget all of these drawings here. I'm going to explain them in a second. In fact, maybe I can just hide them. I think I can. There we go. So MotiveWave is such a great product. If you had a chance to take advantage of their March Madness sale, which takes place in March every year, that happened last year. It happened, ended on the 17th anyways. They had 25% discount. I was tweeting that out. Look at this big candle. We've seen the same kind of candle on March the 30th and a pullback. We saw it on March the 26th. We saw this big one on the 24th. But what's unique about these big ones is that in the run-up to its high, we didn't see these kind of big candles like we're seeing now. This is a lot of volatility and uncertainty, and it has to start calming down a little bit before we're going to see a trend. We're not going to see these up candles all the way up to the 50. We're going to see zigging and zagging. We're going to see an opportunity to buy again lower. Some of the other big stocks that came up were the real estate investment trusts. My AGNCP was up 14%, AGNCN was up 9%, and the underlying common shares were up 9.6%. Let's not forget to look at the VIX, but the VIX took a little bit of a drop down. Now we're going to reintroduce the clouds, the Ichimoku, because they're starting to come back into range when we can look at some kind of predictability on the daily and weekly charts of the Ichimoku. Right now, the 50 moving average is where the volatility index is, but there's not a lot of support when it comes down to strike the cloud, meaning that there's a possibility that there is some more volatile time ahead. And we look back to volatile periods, like back in 2018, we had big days of up volatility, big days of down, up, down, and then finally it quietened down. let's look at, let's alphabetize these here for a second. Let's look at Apple, up almost $20 today. So Apple, like the S&P, this was the S&P. Apple, like the S&P, has these big candles as well. And we were not seeing those big candles leading up to the high. Let me go back to the S&P because I forgot to tell you about this. This pattern where you have this big down wave, this up wave, and then a small one down reminded me of something. So I decided to take the tool that you have in Motive Wave called the auto harmonic, which can draw Gartley patterns, bat patterns, butterfly patterns. Those that Gartley, bat, and butterfly are the three most common. They're all referred to as Gartleys, but look them up. Look at Investopedia and see what Gartleys are, but they are predictable harmonic patterns that stocks exhibit. And sure enough, we've got one that's fitting perfectly. The starting point is called X, and its first low point, and this cannot be broken. This has to be the low point. Once this low gets taken out, it's not a Gartley pattern anymore. We start all over again. Moved up to where? 38.2% of this down move. And then we had another down move, rejected at 38.2% to where? Forget that it's 23.6. It moved down to 38.2% of the A to B move, which represents C. That's a good place to launch now and form our fourth leg, which has a terminus at 78.6% move back to X. But if it continues, it can go all the way to 35.49. So this Gartley will stay in play until we lose the C point, and then we destroy the Gartley, it falls apart. But if we can keep this going, then we're on our way to 31.50, but it's going to be a choppy ride. We might get up to the 50 and then start pulling back. This is supposed to be the worst case of coronavirus. Now, Trump tweeted today he sees the light at the end of the tunnel. On Friday, he said we were going to see more deaths this week than we would be comfortable with. He didn't say exactly that, but he said lots of deaths. And then on Monday morning, the jerk says, I see a light at the end of the tunnel. Why? Because the Dow Jones was up. He equates optimism with the Dow Jones, and don't do that. Don't do that. That's a false assumption. Stick to the plan. I'm sticking to the plan. I'm keeping all my short calls on all of my stock. Caterpillar had a pretty nice day, but only up 3.82%, but it stopped right at the 50 simple moving average. Disney up 5.75% today, but still not making any new highs. We've probably got a Gartley pattern coming in here too. So I'm going to take my little auto harmonic and take it from here. And yes, we do. Look at that. We have a harmonic happening here, except we dipped a little bit below where you'd see a normal C, which is a 38.2% pullback of A and B. But that was only a one-day tail in the candle. It's right here where it actually came to support C, and the next day it moved up and down. But nonetheless, anyways, that's a good ABCD. So you've got Walt Disney that's doing a Gartley pattern. I wonder if we see the same thing with Apple, and we probably do because they're all moving very similarly. So let's take this point, and there we go. We've got a Gartley pattern happening in Apple as well. But we had two candles below the C. Nonetheless, it's still a reasonable Gartley pattern with its first target at 278.30. And to get there, it's going to have to take advantage of this weak cloud, and that's possible. Home Depot is the one that I love, 6.4%, created a bit of a gap here. So now it's got two gaps below it that it could possibly fill, and I'm sure you're going to see the same thing here as you're seeing everywhere else, and you're seeing a Gartley pattern here as well. So I bought more Home Depot today, another 100 shares just below 190, but this time I did not buy short calls. But I will put a short call on top of there. It'll probably be an April 200 if I were to take a short call, but I'll let you know on Twitter. AT&T up 7%. Its dividend gets paid on April the 15th. Whirlpool up 12%. I bet you we don't see the same Gartley pattern here. Let's take a look. We take this high to this low, and we really are not seeing the Gartley pattern on Whirlpool. So that's our look today. I think there was some, yes, the banks I wanted to show you. So let's go to a chart of 6 banks, a table here, 6 banks. And let's close this one down. So we're going to look at Bank of America, Goldman Sachs, JP Morgan, Citigroup, US Bank, and then the XLF in general. So let's take a look at Bank of America. Bank of America from 2012 low to its most recent high found support at 50%. That's pretty important. That's pretty significant. Let's see if that's the case with other stocks, other banking stocks. Goldman Sachs saw its support at 61.8% from January's 2009 low to its all-time high. And that also coincides with this green line where you had resistance, resistance, support, and now new support. So it had a 61.8, Bank of America retraced 50%. JP Morgan, 50%. And saved by not having to come down to this area of support, 50% and a bounce. Citigroup. Now Citigroup is a bit of a different case. Look at that. Doesn't look like any of the other charts. I think it had a reverse stock split. That's a reverse stock split. That's why the chart isn't correcting for that. So we're going to take from January of 2009 to its most recent high, and it had a 61.8% pullback to a point where you do have a green line that represented support and resistance many times over the years. US Bank, exactly 61.8%, the 5th biggest bank that just renewed its dividend. So good sign there. The banks seem to be pointing the way to telling us that they feel that they have the capital and the Fed backing, that's very important, and the Fed backing that'll buy any of their bad debts to keep the economy going. So the banks are a pretty safe bet. If you want to buy some dividend stocks and you like banks, now is the time, because the XLF found its support at 61.8. So 50 and 61.8 were Fibonacci's of 2009, 2012, reaching back, that are good indicators that these stocks have found a bottom. So take a look at the banks. I have a lot of banking stocks, not that I trade on this platform, but in other places. I'm Canadian, so I've got some Royal Bank, Bank of Montreal, TD Bank up in Canada that I don't trade, that I just keep, and they're wonderful dividend stocks.